right. Good morning, everybody. Happy Thursday. Welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza might be joining us today as long as he has a reliable internet connection. What else we got today? We got Kenny Glick, we got Sean McLaughlin, and we got Grant Hawkridge, aka the chief Aussie operator at All Star Charts. He's also the writer of the Daily Number email, which if you don't get is in the description. I recommend you get that. It comes in your inbox every day at like 5 a.m. It's awesome. So Grant will be on at 9. And yeah, we'll see what we're talking about today. How about that? What up, chat? Everyone doing good? I'd say so. Okay, let's roll. Here we go.
All right, not to be a ball buster and already breaking balls at 8:30 in the morning, but I believe as the resident English major, you're asking people if they're doing well, not if they're doing good, right? If they're doing good, that means they're like.
Yous do good, I's do good, we alls do good.
Also, now it's a Jersey thing, so now we're not even speaking English.
Hey, yeah.
So you don't speak English or Italian, right? Like Kenny likes to say, it's like this like weird like Staten Island language.
Yeah,
right?
yeah, right.
Use people, Utes, the Utes of America these days.
We all do good.
I got to tell you, can I tell you a secret?
Okay.
So the other day I was at a dinner. It was like a fancy dinner. It was like a business dinner, high level executive stuff. Spencer, big boy dinner, and I was just talking about Goldbelly because like I order Goldbelly. I order buffalo wings from Buffalo because where else would I order buffalo wings from, right? I order crab legs from Alaska because where else would I order crab legs from? I get fried chicken from Nashville. I get the jambalaya and the gumbo from Louisiana. I get the brisket from Texas. Like, to me, this is just common sense. Dude, these guys were freaking out. They could not believe that I'm ordering wings from Buffalo and I'm ordering crabs from Alaska. They couldn't believe it. Like, this is like a serious dinner. These guys are freaking out. They're FOMO about my Goldbelly orders versus their lack of Goldbelly orders was hilarious. Isn't that funny?
I hadn't heard of Goldbelly until you guys told me about it.
Only the best website ever. I can't think of a better website than Goldbelly.
I still have never used it. I've never used it, but I get their text messages a lot when they have sales. The
cheesesteaks from Pat's, I highly recommend. The way that you cook them in the oven, they come out incredible. Not that Pat's is the best cheesesteak in Philly, far from it, but not the point. Very, very good. The cheesesteak from Pat's. There was another one that I wanted to mention that I thought was really good. La Nova. Right, so if you can order buffalo wings, everybody likes to go to Anchor Bar or Duff's. I highly recommend La Nova and get extra sauce. Extra sauce on the La Nova.
What does one order from Goldbelly from Disney? Orlando.
Nothing.
Okay.
Walt Disney, not known for their food.
Okay.
Best cheesesteak in Philly. You ready? Mama's Pizzeria.
Okay,
Mama's Pizzeria.
Again.
They don't even make pizza. Wild, these people from Philly.
Let's talk about central bank rate hikes, or no?
Must we?
No, we don't have to.
Yeah, please don't. Can we go to the state of the market, talk about something important? Let's talk about something important. All right, we got the Dow futures this morning. Down 55 points. Pretty flat in the session. 44,170 for the Dow. S&P futures down almost 1/3%. 6,073 for the S&P futures. NASDAQ leading the way lower this morning, down 2/3%. So 136 points for the NASDAQ 100 futures. 21,660 for the NASDAQ 100 futures. 30-year bond futures down 1/4%, just under 118. Crude oil flat at 70. Copper down 1/3% at 4.25. Gold down 0.75%, 27.37. Silver down 0.75%, 32.70. With the volatility index still under 14, at 1375. Of course, in funny money land, we've got Bitcoin hanging in there, back above 100,000, 100,800 to be exact, flat this morning. Ethereum up 100 points. That's 2.5% of upside for Ethereum this morning. That's 39.30. Solana 230, up 1% on the day. Binance 713, making moves. Binance pretty flat on the day with the total crypto market cap. Mr. Spencer Israel 3.54 trillion, with the Bitcoin dominance still under 57, down close to 56. What stands out from this morning's futures?
Should anything stand out to me? I don't know if anything should stand out to me. I mean, the
Did you
Ethereum
say that there
Bitcoin.
was like a central bank thing?
Well, yeah, there's a couple. ECB cut rates. We knew that was going to happen. Swiss central bank cut rates even more. But the whole world is in a, except for Japan, is in a rate cutting cycle. So not really surprising. Should I care about this Ethereum Bitcoin divergence this morning, or not really?
I mean, it's really that Bitcoin dominance keeps rolling over, right? So, I mean, it's really a function of Ethereum outperforming. We've seen some of that really since the Bitcoin dominance peaked, and Solana's not really making much of an impact there because Solana's too small. Same thing with Binance. So that Bitcoin dominance situation is really Ethereum. Is really what it is.
Yeah, cool.
Just looking at market caps, you got Bitcoin right now at 2 trillion even, with Ethereum at pushing 500. So Ethereum pushing a quarter of the market capitalization of Bitcoin. That's not nothing. And just to put things in perspective, with Ethereum pushing 500 billion, you're looking at Ripple at 130, Solana at 110, Binance at 100, Doge at 60, Cardano at 40. So just to put things in perspective, how massive Ethereum is relative to the others outside of Bitcoin, right?
All right. What were you talking about in your morning note this morning? The Amazon of South Korea.
Yeah, so we've been talking about the rotation into consumer discretionary since this summer. Anybody who's surprised at what's happening in Tesla clearly wasn't paying attention. This was not about their stupid auto manufacturing orders or whatever stupid shit they were telling me at the time. Auto manufacturing? Really? Tesla? Come on. It was a top-down thing. Consumer discretionary on a relative basis, we were talking about it here every day, was putting in a 10-year top in consumer discretionary relative to the rest of the market. That was this summer. So if you were in the camp that this bull market is not over and this bull market still had legs, then you had to go in and buy discretionary. I mean, it was that simple, because if that top completed, bull market canceled. That's it. I mean, it was that simple. And so I and the rest of us were not in the camp that the bull market was over. Quite the opposite. We're probably just getting going. And if that were to be the case, then by definition, mathematically, they had to step in and buy consumer discretionary. Amazon being at the top of that list at 22% of the index, and Tesla right behind it at 14% of the index. So, down at support, sentiment down in the dumps. You hold your nose and you buy as much discretionary as possible. That was the trade. And sure enough, that obviously worked out really well. But now what we're seeing is, as that consumer discretionary leadership has, taken a hold on this market, you're seeing it around the world. And so why don't we throw up Amazon here so you guys can see. Let's set the stage here. So here's Amazon. And Amazon right here is completing this multi-year base. And if this pattern looks familiar to you, it should. Bitcoin looks like this. The Dow Jones Transportation Average looks like this. The software index looks like this. Shout out Caleb Franzen, who's pointing that out. Absolutely right. This is a theme of the market, right? This is just what the market looks like. To me, it's less about Amazon and like their AWS or retail orders or whatever, even though I'm hearing great things. Jeff Mackey says Amazon just won the world, was his exact. So, something's going right there. But more importantly, the structure of the market is a big one. So why don't you go to the next chart? So this is a trade that was put on yesterday in Breakout Multiplier. This is Coupang. My understanding, correct me if I'm wrong, this Coupang is technically based in Seattle. Do I have that right? See how
Yeah.
accurate I am.
No. It's a South Korean business, and that's all that matters. Well, where the headquarters may or may not be is sort of
They are
irrelevant.
headquartered in Seattle, here in the good
Yeah,
old
it's
US
not.
of
That's
A.
not. That's not relevant. It's like how
Yeah, well,
Canadian.
relevant to me, my friend.
It's like how
You just listen.
Canadian Solar has the word Canadian in its name, but it's not a Canadian company. Right?
Don't be jealous that it's in Seattle and not in New Jersey. Like it's not that big of a deal. Settle down,
It's
right?
not.
So this is
The
the
business, the
Amazon
revenue comes from South Korea.
base in Seattle. This is the Amazon of South Korea, ladies and gentlemen. The Amazon of South Korea. Look at that base. If that base, just like the other one, if this one looks familiar, it's because, man, these trades have been working. Look at like Peloton and Docu. I mean, some of these names, these speculative growth stocks, as Steve Strazza likes to call them, C Limited, exactly. Good call, Harminder. Same exact pattern. This complete destruction from the 2021 peak. Just an Andy Dufresne, Kardashian bottom sort of situation, right? And now we're getting the breakout. So to me, if you are interested in consumer discretionary, if you're interested in the rotation happening into other parts of discretionary, particularly around the world, this is the one. So Breakout Multiplier takes all of the research that's done at All Star Charts. This is at the center of everything that we do here. Obviously, if you didn't know, that's where it starts. And then so All Star Charts has been around for over 10 years. And we've gotten emails being like, JC, the research is great, the trade ideas are great, but we want to be more aggressive. We want to take these trade ideas and multiply the returns on those breakouts. So we listen around here. We could be stubborn and hard-headed and argue and debate, no question, but we're listening. We're listening. Shout out Carrie Schaffer, by the way. So we're listening. So we want more aggressive trades. So what Breakout Multiplier does, it's a very simple 3-step system that takes the best trade opportunities coming out of All Star Charts research and looks to maximize those returns by multiplying that breakout. So if you heard about that 25% winner in SoundHound, that 25x winner in SoundHound, that's 25 times our money in SoundHound. The 12x return in Peloton, 12 times our money. The track record is off the charts. I have never seen anything like that. So I am happy that we listened. By the way, you guys keep giving us feedback. We're still listening. There's more stuff coming. So we're listening. But there's nothing we've ever launched ever that has been as successful as the Breakout Multiplier. So a trade in Coupang. There was another trade in technology that was put on also yesterday, but while we're on the subject of consumer discretionary, Coupang was one of them. Love this trade. Highly recommend that you check that out. If you are not a member of Breakout Multiplier and you'd like to be, go ahead and click the link. And if you are a member of All Star Charts already and want to add Breakout Multiplier, just email Mary and tell her JC said that you'd hook them up, that she would hook you up. So just like that. JC said you'd hook me up. Sorry, Mary.
Just like that. Look, bottom line, it's a bull market strategy, and we're in a bull market. That's all you need to know. Right? That's it.
Yeah. Thanks for Harminder in the chat today, giving us love. Appreciate you, Harminder. I see you, dog. I see you.
Yeah, there's a lot of new highs right now.
It's a bull market. I don't know if you heard, Spencer.
Although when we have Grant on, in a few minutes, I can't wait to ask him about the decliners versus advancers list, because we're now at what, 8 days in a row? 7 or 8 days in a row?
Something like that. Is this something that we should be scared about, Spencer?
I don't know. I'm gonna ask Grant. Grant is, every day the number goes up by 1.
Yeah. I like that face you just put in there. I like that face.
I don't know.
I don't know what to tell you, Jay. I don't know what to tell you. I got one. Let's throw up the slide 2 here. So this one comes from Eric Balchunas. Big fan of Eric Balchunas. I must say, I have been noticing quite the bromance there online between the one Eric Balchunas and Todd Sohn. The bromance that's happening there between these two is on a whole nother level. Like their love for ETFs and each other's work. I mean, it's great. It's fascinating to watch. And I'm a big fan of both of them, so I'm just busting chops here. But it is funny to see the bromance. Who has a bigger bromance, Is it Eric Balchunas and Todd Sohn, or is it Michael Batnick and Ben Carlson?
Well, the latter pair do a podcast together and they work together. So
But the
probably those
bromance started before the podcast.
guys.
The bromance between Ben Carlson and Michael Batnick led to the podcast. True story.
Speaking of Eric Balchunas and ETS, didn't I see a stat this morning that we just hit some big round? We just hit a big round number in flows for the year.
Can you throw it up, please?
Yeah.
So Eric, here's Balchunas. This one, here's a filing for a slew of return stacked leveraged single stock ETFs. I'll say that again. A new filing for a slew of return stacked leveraged single stock ETF combos from a firm called Quantify Chaos. What could go wrong? The idea is instead of 2x MicroStrategies, you could do 2x MicroStrategies plus NVIDIA.
Yeah, so, I mean, this is the natural evolution of that genre, right? So
I like how you call it a genre. First of all, that's hilarious.
I mean, it is.
Can we talk about the name of the firm? Can we talk about the name of the firm?
Sure.
What is it? It's Quantify Chaos. Quantify Chaos. I mean, what could go wrong?
Look, these products have been around for years in Europe, right? So they're relatively new for us in America.
Have they? Where they stack two different stocks and then leverage it?
I don't know about that, but
yeah, I don't think so.
They've got insane leverage. They've got insane leverage over there, right? More than we've ever had over here. So the fact that we're getting these now, look, if there's a market for it, this is why I love ETF so much and the market, because if there's a market for it, it will survive. And if there isn't, it won't. It's really that simple, right? And as with anything, buyer beware, right? Know what the hell you're buying and know how daily rebalancing works with leveraged vehicles. And if you know that, then great, go for it, right? Kind of where I'm at. Caveat emptor is what they call it, right? Caveat emptor, buyer beware.
I think they call it YOLO. Isn't that what they call it?
They do call it that. These are obviously bull market instruments.
I like the accent that you put on there when you say caveat emptor. How is it?
Isn't that how it's pronounced? It's Latin. Isn't that how you say it? Caveat emptor. I don't know.
I just I like it when you talk with an accent. It's adorable.
Yeah. So look, bull market strategies, bull market securities, bull market ETFs in a bull market. This makes total sense. And there is a limit to this. I don't know where that limit is, but at some point the SEC will step in, I would assume, and say no. Of course, these don't even exist yet.
Saying yes. So
these don't even exist yet. They were just filed. There's a big difference. They weren't launched. So we'll see what happens.
All right, I got two more charts before I leave. I'm gonna be I'll be gone for a week, so I want to get it all out there. Let's talk about Donald Trump, everyone's favorite topic.
Oh, he's supposed to ring the bell today.
Let's talk about Donald J. Trump. Is that what it is? Yeah, obviously DJT. Yeah. Donald J. Trump. So Donald Trump, media and technology, this particular SPAC, found support at the exact same lows that it found support in 2023. Some might call that a coincidence. I would argue that is just support, right? And then it was the biggest winner over that 30-day period, up 300%, biggest winner of any stock on the planet, right? And then consolidated, found support at exactly the 61.8% retracement of that entire monster move. That entire move retraced exactly 61.8% and found support. It is now closing at the highest levels yesterday since before the election. So highest close for the Trump media since October. Are we going to bet that is not going to retest those all-time highs and eventually break out and make new all-time highs? Anybody making that bet? Any thoughts? Any takers?
This is always one that's been beyond me. I don't understand why this stock moves the way it does, whether it's up or down.
It had 15% short interest off those lows.
How much? How high? How high?
15.
That I wouldn't call that high at all.
Okay. Well, I would.
15%.
Yeah.
That's not low, but it certainly ain't high.
It's not egregious, but it's not low.
I said it's not low, but it's not high.
Yeah, it's high enough. It's high enough to matter. Steve Strazza, our chief short interest correspondent here, chiming in saying 15% is high. Do you guys believe Steve Strazza and JC or a one Spencer Israel?
All right, agree to disagree. To me, like 30 is high. 15 is notable.
But how often are you going to see a 30% short interest, bro?
You see it sometimes. Anyway, so DJT.
I love the fact that they're saying that the company loses money. Yes, that's why it has such high short interest. Everybody agrees it's a shitty company. If you look at our short interest, like our short squeeze report, they're all bad companies. Like, but these are like the worst companies out there. But the point is that everybody already agrees. Like, we're past that, right? Okay, I got one more for you. This was coming from the 2 to 100 club, which just dropped yesterday. I was in a meeting yesterday and people were asking about certain things, important business meetings, Spencer, and they were asking me about the 2 to 100 club. And I was thrilled to explain to them that what we're doing is looking for the next $100 billion company. And we've made it so that it is almost impossible for the next $100 billion company to not come from this list. So these are stocks specifically between 2 and 30 billion. Because obviously the next $100 billion company is the one that right now is at 99, but that doesn't help us. So we're looking for anything between 2 and 30 billion, because even if the stock is 30 billion, it could still triple before getting to 100. So that's good enough for us. So we're looking for stocks between 2 and 30 billion, growth stocks only. So you're not going to find any consumer staples or tobacco companies or the types of stocks that cannot scale at the pace that we are looking for in this particular scan. So you're going to find a lot of growth stocks, internet, semiconductors, biotechnology, cloud computing, the types of industries that can actually scale to $100 billion for us to make a lot of money, because that's what we're trying to do at the end of the day. Yusul says this is the best list. It might be. It might be the best list. It's definitely in the conversation. It's hard for me to say the best list because the short interest list is pretty awesome. The Hall of Famers list is pretty awesome. The minor leaguers that are small caps are pretty awesome. Like, they all have their own thing, but the best of the best of the best, 2 to 100 club, maybe it could. It very, very well could. So I know we've got Kenny in the house. I know Grant's coming in. Sean's coming in. We got a packed show. We can take that down, Spencer. We got a packed show today. So this is me signing off. I will see you guys 1 week from tomorrow.
What?
1 week from tomorrow.
You're leaving us now?
I'm leaving us now. You're on your own, Spencer. Try not to get us canceled.
And you're going to Disney? You're doing some boots on the ground due diligence? Is that right?
Yeah, I'm going to do some channel checking in Disney. We're going to spend all of our life savings in buying $12 hot dogs. But I'm long the stock. So last year I went, I'm paying $12 for a hot dog. I'm like, what the fuck is this? So I came home, I bought the stock. We're making money on the stock. So I'm going to go in there and I'm going to be telling them these $12 hot dogs got to pony up, got to make them 20. Let's go. Daddy's got to make some money. So I am no longer upset about how much money we're spending in Disney. I'm actually going down there to encourage them to raise prices even more so that shareholders can be even more profitable. Because that's me now. If you can't beat them,
you're the only person to go to Disney and say, no, raise the prices, raise the prices.
Because it's like SantaCon. Like, if you're in New York City and you're out on the day of SantaCon, and you're not a drunk Santa, it's really, really annoying. Like, really annoying. And that was me for years. And then one day I said, you know what? If you can't beat them, join them. I'm going to get drunk and dressed up like Santa Claus too. And I was no longer upset about the situation. Disney's the same way. If you can't beat them, join them. I'm in. I'm a shareholder. I'm with you, Disney and Mickey and the whole thing. And Iger, right? Do I have that right? Is the guy named Iger?
For now, Bob Iger is still in charge, yes.
Shout out Bob Iger. Let's go. I'm out. Try not to get us canceled, Spencer. Love you guys.
Speaking of SantaCon, anyone in the area, SantaCon is in 2 days. This Saturday in New York. If you are into dressing up like Santa and being belligerently drunk, 2 days from now, I will not be going, as keeping up with every year, I never go. Okay. We do have Grant in the house, and Kenny joining us momentarily. And Steve is Steve is lurking. He's here, right? But he's got some like construction going on in his house, so he has not the most reliable internet connection. So like maybe he'll hop on. I see him in the studio, but his camera's off and his mic is off. But if he feels confident in his internet connection, I would definitely bring him on. So why don't we do this? Why don't I bring Grant on in a moment? But you know what? Since they're gone, and I never get the chance to actually like run through some headlines. We always talk about how we don't do enough like headline run throughs on this show, and Steve gets annoyed. But it's because like they take over the show, and we don't get the chance to do it. Right? You know what I mean? I always have headlines, and we never get the chance. So a couple of things that we don't normally get a chance to talk about, like Adobe earnings, for example. Adobe is getting cracked this morning. What's it down now? 11%, 10% on their earnings report. Actually, it wasn't earnings, it was the guidance that was bad. And that is why Adobe is down. Big loser of the day, Lovesac. Ouch. JC's talking about discretionary. I meant to ask him. I feel like discretionary has the most dispersion. I could be wrong. Grant would probably know the answer to that question, actually. Lovesac down 22% this morning on their earnings report. What else do we have that jumped out to me? I was watching Uber this morning. They're bouncing back after a tough day yesterday. We didn't even talk about GM Cruise yesterday. I wanted to bring that up, but I don't have enough time. GM shut down their robo-taxi operation. These things interest me. What else did I have? Central banks. We had PPI. Do you guys care about that? Probably not. Okay. Is Kenny here? Yeah, Kenny's here. Let's bring Kenny on. And I mean, there is no Spencer bumper, sadly. There should be, shouldn't there? Let's bring Kenny on, and then we'll bring Grant on, and then we'll bring Sean on, and maybe Steve, and then we'll see where that gets us. How about that?
It's been a long time coming. They ain't come for my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Yo.
Good morning.
Good morning.
Good morning. Good morning. We've talked the whole night through. Good morning. Good morning to you and you and you. Hi.
Is it a good morning for you? I'm asking.
You know what? I just woke up in a good mood, which is kind of strange for me. I'm usually right into battle mode and, just get angry about something. No, I'm actually in a pleasant mood. How are you doing?
Wow, pleasant mood. Is it because it's the holiday season? Maybe, perhaps.
It's the most wonderful time of the year. Yeah, my wife said something crazy like, "Hey, how about we have all of our family over for Christmas?" I was like, "Even my brother-in-law?" She's like, "Yes, even my brother-in-law." So shit's getting crazy in the house right now. So I don't know what's going on.
All right, I have not seen. I saw your morning note come in. I didn't read it yet, though. What's on the radar today?
Let's talk about Stitch Fix, because I can't believe I forgot to mention.
Dude, I was gonna bring this up to you yesterday, but as always, I don't get the chance to say what I want to say on this damn show. Stitch Fix, I did bring it up to Alfonso, which is probably below JC's line now because it's below $1 billion. But what a day, huh?
Listen, I can't believe, that's the point about this moment. We share these moments together each morning. There's so many different things going on, and I forgot to talk about the main one. Stitch Fix was a 4-year Andy Dufresne pattern coming out yesterday. So absolutely amazing. And again, when they have that catalyst of the earnings, and again, if you guys could see my chart, I don't know if the charts are working anymore.
Yeah, we're good.
Yeah, so here you go. I mean, this is the weekly. So again, we haven't had any life out of the stock in quite some time. That's what makes it a better candidate for the Andy Dufresne, because the Andy Dufresne is partially a short squeeze. So when you're coming out of these long-term trades, again, the 3-year VWAP strikes again. So we thought we could get the 586, and we did. And I'm not a fan of buying the gap, but yesterday's action provided us an opportunity to play the fade, which I do like. First you got the fade, and then you got the faux show, and then the bro, and then you got up to $7. So the Kardashian meets the Andy Dufresne once again. And now, again, what we do with these names, yesterday was extraordinary. Now Stitch Fix gets promoted to the main watch list. We keep an eye on it today for any activity. But again, there's so much going on. I want you guys to look at this stock KROS. All right. Yeah, now we're talking, right?
All right.
So absolute disaster. So when you see something like this, all right, so just like Stitch Fix for 3 years doing this, going sideways, this stock's been doing it all morning. Now, again, whatever happened with Cross or whatever they do, the drug apparently doesn't work, but that doesn't matter. Again, we're back to trading price. The catastrophe has happened. And now that it's gone Andy Dufresne for the entire pre-market, it just flirted with its first attempt to break VWAP and kind of failed. So now, later today, or again, for the first 15 minutes, 20 minutes, however long, if it can recapture the VWAP and get back over that 1950, you look for the stock to get maybe another 2 or 3 points out of it. But so far, again, some of our traders have already bought it for the reversion trade, and you got paid already, and now it's just going right back. So keep an eye on this one. And, again, Stitch Fix, of course. But, again, back to earnings reversals on Adobe. If you trade big stocks, lovely idea this morning so far. Kind of the same setup under the VWAP, reported earnings. It's getting hammered. We all know you'll love Adobe, except that analyst that got me out of the stock 12 years ago because he said they were going out of business. Great call by that guy. Here's the VWAP break, 489, and you tacked on 4 or 5 points. I mean, these are the day trades that we do each morning. We're just looking for these earnings reports where there's a lot of activity and playing around VWAP. So far so good. Again, that's not why I'm in a good mood. I am in the happy holiday spirits, my friend. How about you?
Well, not anyone who's long KROS this morning, down 73%.
Yeah.
Only biotechs can do that.
Only
biotechs.
It's true. Yeah. So what else are we looking at today? I don't know. I like the fact that those
Wait, hold on. So if you go back to Stitch Fix for a second, so okay, we had a big breakout, right? Now, but I missed it. So now what?
Now what? Perfect question. Under 640, we're shorting it back to the 585. But stop what you're doing because you're about to ruin your entire life if you are shorting the stock and it's above 7. So if it breaks yesterday's highs, which are right here, it's almost beautiful. It's just you can't get better. So if this thing consolidates, which it should today, a little consolidation, maybe some shorting. But if you see Stitch Fix above 7, that's when you've got another chance for liftoff, because this thing's going to be talking about, I think it'll be the 3-year high right here. You see where it failed last time? That's where we're thinking it could go. That's $6. So that's $8.85. So you break $7, you might be looking for a run right back to where it tried to run 2 years ago. And that's what I love about this pattern. Once they break out of these ranges, they go searching for what they were doing 2-3 years ago. So again, above 7, I'm a huge fan. And hopefully it happens tomorrow on options expiration so we could get some $7 calls cheap. But today, you look for consolidation, maybe even some shorting, but make sure you're not short if the stock's breaking over $7.
All right. I know Kenny has never used Stitch Fix. Neither have I. If anyone in the chat has ever used Stitch Fix, please let us know and tell us about your experience. Do you even know what they do, Kenny?
My wife doesn't like it. So that was what I thought it was a cool idea when they first came out. Again, when I remember when Open, there was a company during COVID everybody was excited about that you could buy a house without actually, going there. It was a virtual tour. I think it was called Open. Maybe I'm wrong.
Open Door.
Yeah, and my wife said that's the dumbest thing ever.
Open Door is still around. Open Door is still around, Kenny. I think it's open.
And she's like, that's the dumbest idea. Nobody's buying a house without doing a walkthrough. And she was like, short that stock. She's never said the word short a stock ever. I was like, okay. And next thing you know, I'm shorted. She hates Stitch Fix. So, right. I thought it might have been a cool idea. I was like, all right, they're trying something different. You take a picture of yourself. They match the clothes for you. Somebody like me needs that. I don't shop for myself.
Yeah, they basically shop for you. And they send you clothes and you send them back if you don't like
the
them.
idea. Nothing ever worked out for her. And she was right about that too. I hate when I have to compliment my wife about stock prowess, but yeah. She's been all right.
All right. Stitch Fix, Open Door. Names from yesteryear. All right, Kenny is going to go to his room right now. Hit the bid. Go to your room, Kenny. Hit the bid.com.
Yeah, be careful out there with this cross. Again, I don't know what the story is, but apparently their drug is not doing well. So again, I'm looking for
what happened is they discontinued a trial. They halted a trial today. Is what it was. So.
Oh, all right, cool.
Yeah.
All right, we'll see. But yeah, all right. I got my eye on those big guys, Adobe, Cross, and of course the quantum stocks. All right, boys and girls, I'll see you guys later.
All right. Let's bring on the chief Aussie operator, Grant Hawkridge. one of the secret weapons here at this here operation. He's got amazing charts, and he's here. Let's bring him on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Yo,
Spencer.
yo, it's me and you.
That's it. I like it.
I got JC going to Disney. I got Steve with no internet. So it's me and you.
That's it. I like it. Nothing
Yeah.
wrong with that.
No,
Holding the fort down.
that's right. That's right. Okay. There is a link, guys, in the description on YouTube to the daily number. It is probably the new one, dare I say, the newest or one of the newest emails we've been putting out. Grant's been doing it for, I don't know, what, a month or so now, maybe a little bit more.
It's been about a month.
One number a day, one number that matters most. And I've been reading it
Over
every
a
day.
minute. Sometimes I
freaking
push
love
it.
What's that?
So one number a day. It's what I'm seeing out there, and I try and keep it under a minute. Sometimes I go over a little bit because there's a bit more to
Yep.
talk about, but I try and keep
so,
it nice,
okay.
quick, short. Yeah.
Let's talk about the daily number from was this today? This was today's. The daily number was
Today's
what? Like 8?
was today's. So there's a lot on the chart, isn't there? So let's break the chart down first. So the top panel is S&P 500 in the blue. Then we've got the black lines, which is the consecutive days the S&P 500 has more decliners than advances. And then the red line in the bottom panel is the percentage of S&P stocks at 1 month lows. So you've probably seen it on Twitter. You've probably heard it on all the media at the moment that we've had 8 consecutive days with more decliners than advances, and the Bears are lapping it up at the moment. They're enjoying this. They're saying that they're going to try and take a victory lap essentially, but at first glance it looks bearish. But when you look under the hood and you start looking at other things and weighing the evidence of everything together, and it's not what it seems just yet, maybe. I mean, the data changes every day. So I'm looking at what we've got today. And today is what I'm pointing out here is when you go back, we've had 3 instances where we've had 8 days where decliners are more than advances. So we've got 2008, 2011, 2018, and today, essentially. And this time it's different. When you look at the prior 3 8-day decliners greater than advances, it's sort of those prior ones have happened in bear markets. And you can see that the spike in the new lows. I'm getting told that my mic's.
Wait, Grant, try to move closer to your mic. You're coming a little in and out for me. I don't know.
Yeah, I think there's Let me just change.
Or maybe you're on the wrong mic. Not sure. But anyway, number of the days.
Try
8.
that one. Does that sound a bit better?
Oh yeah, that's better. Much better.
Okay.
So it's not. You're saying this is not bearish yet, but it is definitely notable. And the reason it's not bearish yet is because we're not seeing an increase in the number of stocks in the S&P 500 that are at their 1 month lows yet. Actually, we are, I guess, but not.
It's very subdued. The new lows are very subdued.
Right.
And like you look at a lot of the other data, there's a lot of new highs. And this time I feel like it's a little bit different. I think it's a bit more sector rotation. I feel like that we're rotating more into what's been underperforming of recent, which is those large cap or mega cap growthy names. And if you go to the next chart.
Oh wait, do I have the next chart? Oh, this guy?
Yeah, so we've got the Mag 7. So what we're looking at here is the Mag 7 versus equal weight S&P 500X Mag 7. So if this chart's going up and to the right, Mag 7 stocks are outperforming the rest of the market. And now look at that. It's at all-time highs, this ratio. So it was underperforming there. A lot of those semiconductor names and large cap names started underperforming, and then all of a sudden, bang! Ever since this 8 days, look how quick it spiked. So I think it's more about sector rotation. And you know me, I like to weigh the evidence, and it's all about putting everything together into one basket to get an outcome. And I don't think the 8 days of consecutive decliners over advances is that, how would you say it? So I'm not putting that much weight on it just yet.
What would it take? Would it take an increase?
I would love to say it. I mean, I don't want to say, but what would make me plant a red flag in the ground is a spike in those 1 month new lows, like to those record highs again, that we saw in the previous chart. So you want to get to that 95% of S&P 500 stocks making new 1 month lows. And we're not really seeing that. I mean, it's very subdued. I think it's around about 17% at the moment. So
yeah,
it's. I mean, when you weigh the evidence, you go to the next chart. A lot of stocks are still in uptrends. So what we're looking at here is obviously the top panel in the blue is S&P 500, and then in the bottom panel we've got a black line, which is percentage of S&P sectors. So with their 50-day average greater than their 200-day. So it's just a simple way of
percentage of S&P sectors with the 50-day moving average that's above 200-day moving average. So
yeah,
this
is
basically
a simple way
be,
of saying it's in an uptrend.
Right. So basically, and you're saying it's all of them is the answer is right now.
Well, 100% of sectors are there, and then if you go to the percentage of S&P's 500 stocks in the same context, with the 50-day average greater than the 200-day average, is at 74%. So stocks are in strong uptrends. I mean, that's what happens. This is what you see in bull markets. So when you're looking at all these sort of things, you're sort of going, okay, there's 8 days decliners over advances. It's not a great thing, but it's when you weigh it up with the rest of the things,
Grant,
it's very risk on.
Grant, John from the chat wants to know, when is the last time we had 90 to 95% of stocks hitting new lows? That was a few years ago, right?
In the 1 month new lows, it would have been around 2020. So the COVID crash.
Not even in 22. Wow. Okay.
Yeah, 22, but it wasn't like that over 90s. It was 80.
All right.
So yeah, if you were going over that 90 sort of barrier, is probably 2020, and then prior to that is 2018, which is when.
All right. So bottom line is if this is the end, if this is a turn, it's like the top of the first inning, to use a baseball analogy. It's like the very beginning of the turn. It's like too early to call a turn. Essentially, is what
I don't even think it's a turn just yet. I think it's just
okay.
It's just something that's happened, and I think it's
But Grant, don't you know that valuations are stretched? That PE multiples are higher than they've ever been. Don't you know that?
I weigh a lot of things in my basket. I put a lot of things in my basket. We use seasonality, we use cycles, we use breadth, we use momentum, we use trends. And at the moment, everything's tilted. Everything's leaning towards risk on still. I mean, there are little things like this 8 days of consecutive decliners over advances, but nothing else is sort of pairing up with it just yet.
Yeah. All right.
So, you go to the next chart. I mean, JC loves this chart, which is the sentiment chart. It's at that bullish region, but there's still room for bulls to come in, and not get me too scared. So when this chart is at the bottom, there's a lot of bullish people around. So it's not there yet. So sentiment isn't. How would I say? It's not even it's probably neutral. It's not a headwind or a tailwind. It's probably leaning towards more of a tailwind because you need bulls for a bull market. If it got really low on that chart, then there's too many bulls. Then I'd start questioning. But right now, it's sort of in that neutral to slash. It's okay at the moment.
Bottom line, bias is to whatever trend you're currently in. When the data says this, right? The bias is to whatever trend you're in. That's where the bias should go until proven otherwise. So we're in an uptrend. I don't know.
We're in an uptrend, and if you go to the next one, we've got like seasonality. We've got the ending of December coming up, and you got the Santa Claus rally at the end of the year. There's a lot of things.
That's like a 5-day thing, though. So, right?
But when you look at the data and you dig into the data, it's quite impressive. It's very impressive if you look at the data. I've got the data, and around that time, that when it's all happening, everyone will be seeing it because I'll be posting it. And then you got the January effect and all those sort of things that come into it. But like with just seasonality at the moment, coming into the end of December, it's going up and to the right. So
Okay.
what I will say is that I want to be looking at the data, but like I want to be mindful, and there's a lot of things, and it's ever changing. So you want to be watching it every day, essentially. And at the moment, it's still tilting towards risk on. If things change, obviously everyone here, JC, Steve, will be talking about it. You'll be seeing it all over Twitter. But at the moment, it's sort of it is what it is at the moment. It's just 8 days that we've seen more stocks.
I wish that I was involved with you guys, with this crew in like late in like early 22, early to mid 22, or even late 21 when we did shift, right? Downshift, right? From a huge COVID bubble to a bubble go pop, right? There was no morning show then. I wish there was, so I could have heard you guys sort of talk us through that, because I'm sure it would have been JC was way ahead of the game on the rebound, right? He was like the only person bullish in what is this, the summer of 22, fall of 22, when breath had bottomed. And he was way ahead of that rebound, but I would have liked to have heard it the other way. I would have loved to have heard it, when the market turned from a bull market to a bear market, right?
So, I mean, the data leads us. You can see when new lows peak and all those sort of things. And at the moment, none of that's happening. We're in a bull market, so we've got to follow the trends. We've got to follow the momentum. And now, that looks like it's switched to that mega tech growth companies at the moment. So,
okay, what are you less bullish on, if anything?
I'm still getting a bit probably frustrated at small caps.
Small caps. Wait,
I'd love to see an all-time high.
Can you move your mic closer? Can you move your mic closer? Do you have it like next to you? I don't know if that's.
Is that a bit better? Is it?
Maybe we'll try it.
Yeah.
So small caps.
Yeah, small. I mean, I'd love to see small caps make an all-time high. They've been coming over 2 years now of not seeing a new all-time high. And you look at a lot of seasonality work, it's the time for small caps. And they're not really doing what they should be doing. So
when you say small caps, what do you mean? You mean like
IWM? Yeah, IWM.
I mean, it's right there. It just made a new all-time
It's right
high.
there. Yeah, that's what I'm saying. But it's still in that consolidation period. I'd love to see that go out to all-time highs, because if it's still below that prior cycle high, it's still in a consolidation period.
All right. I mean, it just made a new high. What, like 2 weeks ago? So
It has not made an all-time high. It's
No?
like 670 days or something. It's the
All
count's
right,
still
whatever.
counting. The count's still counting. So I'd like to see that happen. Because when you're doing a lot of work with breadth, you need small caps to, it can't just be. That's why, like, a lot of my breadth work is I combine it. I do the S&P 1500. So I've got mid caps, I've got small caps, and I've got large caps in there. So it gives you the true breadth of what's happening, not just large cap.
No one talks about mid caps. I mean, you guys do. I don't think about mid caps hardly ever. What am I missing there? Is there anything going on that I'm not thinking about?
I mean, there's a lot of conspiracies about that. Like, I mean, you look at, like, there's no ETFs for mid cap. There's none.
Well, yeah, because they would have
So
to.
is that where the money's to be made? Is that where the big players are making their money, in the mid cap?
Because they would. It would be a pain in the butt because they'd have to kick them out on both ends, right?
But they do it with small caps. I mean, a lot of small caps rotate out really quickly.
All right.
So
All right.
what's
I
the
don't know.
difference if you got to go up or down?
I don't know. I didn't realize that there wasn't really there was that can't.
I mean,
cannot be
like,
true.
each sector. I mean, there is, like, mid cap as a bunch, but there's
Right.
there's no sector ETFs for mid
Yeah.
caps.
No offense, Grant. Who's going to trade that stuff? You?
I love mid caps is like the sweet spot. Mid caps is the sweet spot. Like, that's like, you
Okay.
get that you get that sort of a better looking company, but you're still getting that speculative sort of thrust in moves.
All
That's
right.
just, yeah. I enjoy playing in the mid cap land. I find that there's great opportunities.
Okay. So what exactly is going on there that I'm not paying attention to?
I mean, it's doing better than large cap at the moment.
All right.
It hasn't been 8 consecutive days of, and it's the same in you go down to small caps. It hasn't been.
Wait a minute. I've got some breaking news.
Choo choo, motherfuckers.
JC is back.
Hey, I know I'm supposed to be in Disney World, but I wanted to chime in here, Spencer, who's trading mid caps. I would encourage you to go talk to traders and investors that have been doing this for 30, 40, 50 years. You know what you're going to find when you ask them about their biggest winners? They came from mid caps. You know who trades mid caps? Ed Clissold. Shout out Ned Davis. Ed Clissold, all about the mid caps. Don't be hating on mid caps, Spencer Israel. All right, JC out.
Look, they are the unloved middle child, right? I always think back. I've said this before. There's a famous American actress who did an ad campaign with like MSCI or S&P or whomever, like 8 years ago, about mid caps, and it was like, why is this one random actress doing an ad campaign about mid caps? Because nobody pays attention to them, right?
Maybe they don't want you to. I mean, maybe they don't want you to. They don't want you to know that it's tinfoil hat straight on. Maybe they're misdirecting you to look somewhere else, because that's where the action is.
Maybe.
Yeah.
I mean, so we were talking about 2 to 100 before. Some of those are probably mid cappy, right?
Yeah, they are. They are.
Yeah. I don't know.
It's
Okay.
I like the place.
Yeah.
You'll find me there.
You'll
probably
find,
every
I'll
week.
find you there. All right. Wait, Sam just dropped his favorite Australian chart in the chat, I think. Let me check on this. What is this? What is he telling me? Is this what is FTEL? Do you know what this is? This is internet retail? Vital? You know that?
To be honest, I've never heard about it.
Really?
Let's
Internet
retail.
Let's bring this up here. Hold on.
Man,
What
it
is
looks
this?
good.
What is this?
Yeah, no, I'm not.
You're unfamiliar.
I'm very unfamiliar with it. What's it? It's probably like a layer of. There's other companies underneath it. There has to be, because I'm not sure. I've never. It must hold other companies underneath it that I probably would know. I'm just having a quick look. Yeah, so GD Wellness. It's a fitness equipment company. They
Oh,
they
okay.
probably
All
export.
right,
They
calling
probably
it internet
export it all.
retail is a little bit disingenuous. I mean, yeah, technically it is.
It's fitness.
All
It's
right.
fitness. So
Okay.
they probably build a lot of the things in Australia and then ship it back out, export it out.
All
But
right.
it looks great, doesn't it? The setup.
And wouldn't this be a mid-cap? I guess it would be. No, it wouldn't be. It'd be small.
No, that's
That's $650 million. That's a small cap.
650. It's quite
Yeah.
small.
Yeah. All
I
right.
mean, there isn't most of Australian stock market's small cap when you look at all the components in the Aussie market.
Shouldn't we adjust the large cap, mid cap, small cap bands by country, right? If this is, if Australia's market is only so big, you only have a handful of big companies.
Yeah.
We should adjust anyway.
Look, I think there's about 10 companies in Australia that are over $1 billion. Like it's not a very big. I mean, you got Rio, BHP, you got those you got some healthcare names, but majority of stocks and that's what Aussies like. They like, penny stocks. They like flipping penny stocks. They love it. It's a thing down here to do that. They trade penny stocks.
Speaking of penny stocks, I have been buying shit coins this week, and I've been diversifying my shitcoin portfolio. I'm now up to 4 different shitcoins, and I've got more cash to deploy. So there will be more purchases.
You're braver than me.
No, dude, it's so easy. It's stupid. It's too easy. Is what it is. That's the problem. Is it's too easy.
I mean, I stick to the big boys in crypto world. Like,
so I'm now up to. I own the Luigi. I own the Fwog. I own the AI16Z, and I own the Fart Coin. I don't know what any of these things do.
I love the names that they give them. They're great, aren't they?
Yeah, that's right.
Fart Coin. I can't believe there's a coin called Fart Coin. That's great.
I've seen Zero Bro, Dawson. I don't own Zero Bro yet. I've seen it. Yeah. I mean, I'll probably do some more buying today. I have no clue what I am doing. But it's fun. Like my friends, a lot of my friends bet on sports. I'm not really like a sports bettor. I just don't have the attention span for it, but I've got the attention span for this apparently. So it's all gambling.
It's aggressive. It's much more aggressive than sports betting.
In a way it is. Yeah, definitely. But I at least have I could justify it with lines on a chart or something like that, right?
There's a trend there. It's coming out of a base.
Right. Yeah, I haven't done that yet. Small numbers. That's what we're going with here, and then we'll see what happens. Ask me in a month where I'm at, and we'll find out. But look, we're in a bull market. When you're in a bull market, you buy bull market assets. Shitcoins are bull market assets. Am I a little bit late?
Irresponsible. Irresponsible if you're not involved.
That's right. That's exactly right. It is irresponsible to not make the most amount of money when you're in a bull market. The time to take your chips off the table is when you're in a bear market, which we, as Grant has said just now, we're not there. And we're not
there.
So, all right.
And we'll let you know. We'll let you know when the data changes. And it changes every day. So we've got to be looking at it all the time.
Okay, guys, listen up. Grant Hawkridge, his Twitter handle is on the screen right there, below his face. Follow him on Twitter or X, whatever. And again, the daily number. It's a new thing that Grant's been doing all by himself every day.
Put up the slide. I've dropped in a slide with some.
I have to find it
at the bottom there.
Hold on.
Bit of
good job. You did.
Self-marketing right there.
Look at that. Don't even worry about the link. The link is in the description. You know what? I'll put the link in the chat right now. How about that? You don't even got to copy and paste anything. Just click on the link. It's going in the chat in 3, 2, and 1. There it is.
And it's going to be quick. It's a quick read. It's under a minute, one chart, one.
That's the best
one of my-
part. Is
Yeah.
it's everything we do here, we try to make it quick, right? The hot corner is quick. Louis' daily crypto note is quick. Chart report is quick. Daily number is arguably the quickest because it's literally one thing. It's only one thing.
Yeah.
And-
And it's what I feel like is the most important number of the day. What we should be looking at. That's the way it is.
At the very least, at the bare minimum, it'll make you feel smart, right? That's what I say. Because
and it's free.
And did we mention it's free? Did
Yeah.
we mention that? So look, the link is in
five emails a week for free. Some great looking charts.
the link is
I
in the
say that
chat.
myself.
The link is in the description. The link is on the screen. It's 5 days a week, Monday through Friday. It's Grant. I'll show here. You know what I'll do real fast, just to give you a sense for how quick it is. This is my email that I got this morning. I don't know if you guys can see that.
Yeah, you can see it.
Yeah, right. This is it. It is literally this simple. The daily number is 8. Oh, look, here's the chart. Here's the explanation. Boom, you're done. Right?
And
That's it.
That's it.
That's it. All right. Grant, I don't have any idea what time it is for you. I'm sure it's late or early. I don't know.
1:30 in the morning.
What time is it?
1:30.
Dear Lord. Okay. Well, thank you for hanging out with us. It's I guess it's Friday morning for you, right? So
Now it is Friday.
Thanks for hanging out with us. I
appreciate it.
appreciate
Thanks
it.
for having me.
Somebody said we should get Grant on a few weeks ago. I said done. So we're doing it. And hey, maybe we'll see you in New York in a month, maybe.
Yeah, maybe.
All right.
And I'll have to work on this mic. Is it sounding a bit better? I did a little tweak.
Okay.
Sounding a bit louder?
It sounds better now for sure.
Yeah, I think I had it on low volume for some reason.
That'll do it. Yeah.
That will do it.
All right.
It's fixed for next time though. So
great. Wonderful. All right. Thanks a lot, Grant.
I appreciate it. Cheers, guys.
All right. And then there is me again. So let's see. Is Sean gonna hop in today? If he's not, I mean he should, right? Because it's Thursday and that's what he does on Thursdays. But if he's not, then I'll just dip out. Guys, seriously, we don't have Grant on this show enough, but Grant is one of like the secret weapons here. He's doing a lot of the breath work that makes its way into the All-Star Charts research. Is helping a lot with the scans. He is one of the behind the scenes secrets, no doubt. Him and Alfonso are like the behind the scenes secret. They're not even secrets anymore. But if you don't, at the bare minimum, get that daily number, follow Grant on Twitter, you will not be disappointed. I promise you. So yeah, we'll have to get Grant back sooner rather than later. All right, what do we got here? 9:35. Markets are open. I'll hang out for a few minutes, and if Sean wants to hop on, he will. And if he doesn't, then we'll just dip out early. What do we have today? We do have the options jam session. That's what Sean does every Thursday. If you don't watch that, it's every Thursday at noon on this channel. Sean putting together an options trade, and kind of just reviewing what he's been doing in his options portfolio. Also, if you ever have any requests, we've gotten a few emails throughout this week, responses to our emails. People have asked us about different tickers and such. We do a ticker request show. It's called Chart Request Live. It's every Monday and every Thursday at 1 o'clock Eastern. So that's today, 1 o'clock, where if you have a request on a ticker, you give us the request. It's called Chart Request Live, and we talk about it. Patrick is on it. Strazza is on it. Sam is on it. Alfonso's on it. And so that's where you should be. If you have a question, if you want us or them, not me, if you want them to answer your question on a ticker, be there 1 o'clock in the live chat. Just drop your ticker in the chat. That's all you have to do. Or you can email us as well. Questions at stockmarketmedia.com. And we do that. So that's the programming schedule for Thursdays. Everyone who is in Breakout Multiplier, I'm not positive we're going to do a video today, only because Steve's internet situation is kind of wonky. So just keep an eye on your inbox for that. He'll be communicating with you about whether he can do it or whether he can't. But when you don't have internet, it's hard to do a video. So it happens, right? Okay, what else did I have to go over with you all? I'm looking at winners and losers this morning. What's up with Riot? Riot just doing Riot things. Oh, Starboard. Starboard is taking a stake in Riot. Interesting. All right. That's interesting. Yep, we got Sean here. I see you, Sean. What else we got? Anything jump out to us? Adobe. Yeah, not much bounce there. All right. Let's see what Sean's doing. I'll bring Sean on and then we'll hop and then yeah. That's what we'll do. Where's my Sean video? There it is.
Boy, you're struggling
Yo.
today, brother. How you doing?
Hey, the kids are in charge today. So
Boy, everybody abandoned you. It's like the ship was sinking and they
Look.
left you there.
Not not Steve's fault. I'll give Steve a pass. I would love to blame Steve. I really would. But when you don't have internet, it's hard to do a whole lot. And JC is going to Disney apparently for like the third time in 3 months. I don't know. So
Well, look, I feel for Steve. I know some people who work in contracting, and here's the two truths about contracting. When you hire a contractor to do work, whatever they quote you it's going to cost, assume double. That's number one. Number two,
Yeah.
however long they tell you it's going to take, assume double. So that's what Steve's in right now, and that sucks.
yeah, he's in contractor hell. So
Yeah.
kinda
All right.
sucks.
Well, look, let's get right to it. We could end this thing early, but I wanted to talk about what we talked about in our analyst meeting yesterday. The situation in crypto. Now, I'm not the crypto expert. I leave the crypto stuff to Louis, but I read Louis' stuff. Louis' great information informs my worldview about Bitcoin. So we're all very lucky to have him with us. But here's what I was talking about yesterday, and I think this is a good discussion for everybody. The Bitcoin 100,000 level to me was the most watched level in the history of most watched levels, right? Everybody's talking about when is Bitcoin going to get to 100,000? Well, guess what? It did. And guess what? It was underwhelming. No surprise, right? The markets have a funny sense of humor, and this is not just crypto. This is true in the stock market. This is true in the bond market. When everybody's waiting for something, and then it finally happens, it's never as exciting as you think it's going to be for whatever reason, right? But the good news is, in my humble opinion, what's going on with crypto dancing and flirting with this 100,000 level right now, the way it's been back and forth over the last couple of weeks, is it is wearing out all the hot money. There's a lot of hot money that came into this trade. Okay. A lot of hot money who are waiting for that 100K, or they saw the 100K and said, oh my goodness, I finally have to get involved in Bitcoin. I've been waiting. I'm too late. I better get in now, right? You have a lot of that going on right now. That needs to work itself out. I don't know how long it's going to take. It could take a week. It could take a month. It could take till next summer. But when it does happen, when it wears itself out, I feel like, in my opinion, the next move higher in Bitcoin is going to be the one that catches everybody by surprise. And that one could be a ripper. I don't know when that happens, Spencer. I don't know if it happens tomorrow. It could happen tomorrow, right? I don't know. I don't think so. But when it happens, it's going to be a ripper. And so now's the time, I think, from an equities trader or an options trader to be positioning in names that will likely benefit from the next rally, but give yourself some time. I positioned for next summer in some stocks that I think will do well. Stocks like Robinhood, stocks like Coinbase. I'm a little gun shy on on the miners because they've just burned me so many times and I'm not so sure what's going on there. But, you know, Robinhood, Coinbase, stocks like that, they are set to do well during the next bull market, the next leg higher in Bitcoin, because here's what's going to happen. It's not just going to be Bitcoin that rips. It's going to be all the altcoins, all the shit coins, all the crazy stuff. And where are people trading those things? Robinhood, Coinbase.
Yeah. So from a trading perspective, sure, but from a longer term investing perspective, isn't everyone already in the pool? Like, you're either in the pool and you're a hodler, or you're not and you're Bitcoin going to zero, right?
No, everyone is not in the pool.
You don't
There
think
are so
everyone's
many
in the
people
pool already?
not in the Bitcoin
I think
pool.
everyone's in the pool already.
No, not at all. Here's what it is. Not only is not everybody in the pool, but even the majority of the people who are, myself included, don't have enough.
All right, that's true. I definitely don't have enough either. That's definitely true.
Yeah. So that's where my head is at. JC asked me where my head was at yesterday. That's top of mind for me right now. I feel like the bull market itself probably going to start maturing a little bit. Doesn't mean it's over. I'm not calling for a bear market. I'm not calling even for a major correction. I just think the characteristic of the bull market's probably going to start changing soon. It's not just going to be spray and pray, buy everything, everything goes up. That's the market we've been in for a little while now. It's going to get a little bit more selective. Stocks are going to start trading on their own individual technicals and fundamentals, right? It's not just going to be buy everything, which is both good and bad.
Yeah,
It
that's just the
presents
natural
unique
progression of
challenges,
a bull
different
market,
skill
though, right?
sets, you know, but that's where my head's at.
Yeah. All right. Sean may or may not be doing a live event next week. Stay tuned for more on that. How about that?
Well, if I'm not, you better let me know.
Okay. Interesting.
Nice tease there. Nice tease there.
All right. Someone in the chat asked if I have any strategies. Wait, what was the question? Any strategies for your upcoming kid? I have a whole spreadsheet with the pros and cons of all the different accounts I can open or cannot open. 529, the UTMA, the UGMA, or the I don't even know what's on there anymore. I made this like a while ago. But I've got a spreadsheet of the pros and cons of each, and that's my strategy for the moment, is do some research now and figure it out later.
Very nice. We do the 420 or 529 for our kid. We also have like a little regular margin account with Robinhood. It's open in my wife's name because my kid was, too young, but we have a little account that's just kind of like a play account. I've talked about that a bunch on this podcast, but that's, that's our plan. It's not the perfect plan, but that's our plan for now.
Oh, and then the Roth IRA, which obviously they need income to have. So my newborn's not gonna have a Roth IRA, but yeah,
maybe pretty soon you could hire him to put on the bumpers for you, turn on the bumpers on the show.
That's right. That's true. Yeah, I've got a spreadsheet. I got a spreadsheet for everything, Rachel. I got a spreadsheet.
By the way, how cool is it that you have a spreadsheet and your son is not even born yet? Good for you.
Oh no,
so ahead of the game.
I have like a money spreadsheet, and it serves more than one purpose. And one of the things I have just like a notes section. I just drop notes in there, and at a certain point, I think they were changing the rules to something, or I was reading an article, and I was like, let me just like write down the different accounts so I have it. So when I need it, at least I have the information. So that's why that's there. It's not I use it. It's right next to the part where I track all my subscriptions. That's why I'm so like skimpy with my subscriptions, because I track them and I know exactly how much I spend on recurring things, and I try not to let it get too much because I don't know. It's just how I am.
Well, when it comes to subscriptions like streaming services, the way my wife and I do it is we just wait till there's like a critical mass of 2 or 3 shows on one network that we want to watch.
Yeah.
And then we just subscribe for like a month or 2, bang them all out, and then cancel. That's what we do.
Yeah, that's what we should do. We don't really churn. We just kind of cancel.
Cancel culture.
Yeah. Okay. Let's hop off here. Market's open. Let's go. Everyone go trade. So thanks for hanging out. Thanks, Sean. Thanks, Grant. Thanks, Kenny. Like I said, in a couple hours from now, options jam session, noon Eastern time. An hour after that, chart request live. Anyone in Breakout multiplier, keep an eye on your email for an email from Steve about today's video. And that is the plan. We'll be back tomorrow. Steve will hopefully have internet and not contractors in his house. We'll find out, though.
Shout
How
out
about
spreadsheets. Yes.
Shout
I
out,
see it in
shout
the
out
chat.
spreadsheets. Everyone have a good day, all right?
See ya.
I can't take no loss. I don't need